So, all right, I think let's get this show on the road. Let's wrap things up. I don't think we will take more than this session. Um, as you saw, it's exactly the same exercise for the most part. We're just talking about it now from the creditor's perspective. That's all that we are doing here. So let's get into it and see how far we go. See how far we go. So in my textbook, I'm on 2.7. In yours, I would assume it to be 2.9. I would assume it to be 2.9. Okay. Under the required, it says consider all the errors and redraw the creditor's control as it would have been drawn up had there been no errors. Show the changes needed to the creditor's list, the adjusted balances, and the adjusted totals. Note, the opening balance of the creditor's control account as it stands at present will change. Okay, so here they're saying it will change. In the last exercise, they were saying it's wrong. Okay, so the way we're actually going to treat it is exactly the same. All right. So now you know if you whatever wording you may experience, it's pretty much the same thing, whether they say it's going to change or they say it is wrong. Okay, right. Okay, let me, once this thing loads properly, come now. Behave. Okay, let's try another one. Let's see what's up. Let's try another one. Okay. Okay, that looks better. That looks better. Just wanna. Okay, yeah, better. Cool. We on the right one? Yeah, cool. All right. Okay, cool. So I've removed that already. I've removed the opening balance. Okay, I didn't remove these balances. Okay, let's remove these balances because then we're cheating. Let's just quickly remove these balances. I want us to see how we got to these things together, because I think this is very, very pivotal. It's these small things that kind of rob you of getting 100% on an exercise. So I want us to just erase that so we can see it in its entirety. And I don't think we are pressed for time. Definitely not. If anything, we have more than enough time today. Right. Okay, so we've dealt with that. We understand what we're doing here. They've given us the creditors control. They've given us the creditors list. Okay. And again, if you guys have any questions at any point in time, please feel free to just switch on your mics because I probably won't hear the chat go off. Okay, and I want to address your question as we are going through it. So here up top it says you are provided with extracts of information taken from the books of Standard Stores for the month of June 2008. Standard Stores sells building materials that they buy from various local suppliers. The business does not expect to qualify for any settlement discounts. All occurrences of settlement discounts are therefore incidental in nature. Standard Stores makes use of a perpetual inventory system. Okay, cool. Awesome stuff. You are provided with the incomplete creditors control for the month of June. Okay, so we're operating for the month of June 2008. In your answer book, you are also provided with a creditors list with the balances owing to the different creditors on 30 June 2006. All right. Awesome stuff. Awesome stuff. Right. Cool. Right. The following errors and omissions were noted. Okay. So here they say the total on the creditor's journal has been overcast by 1,200. Okay. The total on the creditor's journal. Okay. So in other words, they left it out, but what they're saying is the total on your creditor's column in the creditor's journal was overcast by 1,200. So what we then need to do is we need to say, okay, cool. What is the current total on the creditor's journal? Is this 2026, sorry, 26,000. Okay, so we come here, write sundry purchases. Okay, and in brackets we then write, okay, 26,000 minus how much? 1,200. Okay. I think we have enough space to stretch this. Okay, so then the total that we should have over there. Okay, let's leave it for now because we don't know if we have any other calculations that need to take place. Okay, we'll punch those in at the end. Okay. So that's number one. We dealt with that. I'm going to cross that out now that it's done. Sorry, I'm going to do this. Okay, cool. Everybody's still happy. Okay, right. Go to the next one, 3.2. No entry has been made for trading inventory bought on credit from Amfiwe for 4,800 including that, less 10% trade discount. So no entry has been made. We bought some trading inventory on credit, okay, from this specific data. Okay, so first things first, we need to calculate what is this amount exclusive of that, okay? So your calculation, maybe I can even just write it here. It would be 4,800, all right, times, remember they said less than 10%. So then that would be 0.90. What do we get? So I'm saying 0.90 times 4,800. Okay, so we get 4,320. Okay, so let's look for this creditor. So plus, okay, because we now owe them more, right? We purchased, right? So plus 4,320 over there. Okay, but remember they said no entry has been made, so that means we also need to include this in the creditor's control, right? So where do we record purchases on credit? Sundry purchases. Okay, so here we also need to then put plus 4,320. Okay, right, so let's proceed. Let's move on. Stretch this a bit. Doubt we'll need more space than that, but oh well. Okay, right. So that's number two. Number three, it says goods bought on credit from C. Cornwall for 6,600, including that, has been entered into the creditors journal as H Mortimer. Okay. Goods bought on credit. Okay. So basically, we just put it under the wrong guy. So we need to remove the 6,600, no problems. And we need to add it to C Cornwall. So plus 6,600. Okay. Right. That is done. We dealt with number 3. We've dealt with number 3. Yeah. Let's see now. Number 4. An original credit note received from S. Zondo for, okay, so original credit note, that means we return goods to S. Zondo. Okay. Right. For 870 was by mistake entered into the creditor's allowance journal as 780. Okay, by mistake entered into the creditor's allowance journal. Okay, so let's see the shortfall, if there's the difference, should I say. It was for 870. Okay, again, this is us returning goods to S. Zondo, but it was entered in the creditor's allowance journal as 780. Okay, so it was entered for less than what it should have been entered. So then the shortfall there, okay, we can just do it with our minds. It's 90. It's 90. Okay, cool. So we now know. Now the creditor's allowance journal, we know, again, I'm repeating, I know, forgive me, is when we're returning goods. Okay, so we basically recorded that we returned for less than what we actually did return for. So we know that this is going to decrease the creditor's control. So we have to debit that. Okay. And so here we write, just want to decrease this font. Here we write, what is it? Purchases returns or sundry returns. See, in your textbook they wrote sundry returns, so let's be consistent with that. Sundry returns. Okay. And then what we're doing is, what's the total there that we currently have? We have 5600, and then we're adding 90. Okay, right. I don't know if we'll have another one, so let's just leave it like that for now. Okay. And if it was entered in the debtor's allowance like that, that means that it was also entered into the individual creditors like that as well. So we need to add, or sorry, deduct 90 from S. Zondo as well. Okay, we need to deduct that from him. Remember, our first point of entry is in the journal. So if our first point of entry is wrong, there's a good chance that everything else is also wrong. Okay. So we've dealt with, that is number 4. Okay, number 4. Let's see if you guys are happy. No questions or thoughts. Okay, everybody seems to be happy over there. All right. Awesome stuff. Cool. Let's proceed. 3.5, an original credit note, okay, for 590 received from S. Zondo was correctly recorded in the journals, but was posted to the wrong side of S. Zondo's account. Okay, we are returning a lot of things to S. Zondo. Ish, seems like there's beef. So we said it was recorded on the wrong side. So basically, what are we saying? What are we saying? What are we saying? Okay, if we do a quick T account for S Zondo, okay, he's a creditor, so he increases on the credit side, decreases on the debit side because he's a liability. This is S Zondo. Okay, remember he's a creditor. So, remember this is a credit note, so we were supposed to put, let me use a different color, 520, sorry, 590 I think it is, over here. Okay, it was supposed to be put over here, but we did it on the wrong side. Okay, so I just want to remove this, we did it on the wrong side, so the 590 was put over here. Okay, but now we need to rectify that. So again, we can put 590, that's going to cancel out the error, but then we have to put another 590 to record it correctly. Okay, if you add those two up, you're going to get 1,180, which is what I have over there. Why are we plussing? It should be a negative, right? This is the original credit note 4, received from, yes, so this should be a negative. Right, so that looks more correct in my eyes. That makes more sense to me. Okay, right. So let's proceed. Are there any questions or thoughts from your side? Everybody is still happy. Okay, if you're happy, I'm happy. Right, let's proceed. So 3.6. 3.6. There they are saying no entry has been made for interest charged at 12% per annum on our overdue account of 18,000 by C. Cornwell on 30 June 2008. The account is 4 months overdue. Wow, guys. Ish, we're not paying our bills, eh? It's a problem. So, we have to calculate how much interest is owed. So we are saying it's 12%, so that's the same as saying 0.12. And then we're saying for 4 months, so we are saying what? 4 over 12. And then we are saying how much was owed. It was 18,000, I think. Yep, 18,000 times 18,000. Okay, so let's calculate this now. Let's just do this. Okay, so we are saying 4 divided by 12. What do we get? All right, then we are saying times 0.12, and then we're saying times 18,000. Okay, so that's our interest that is being charged to us. It is 720. Okay, remember they said no entry has been made. Okay, so that means that Mr. Cornwell here, his account is going to increase. We now owe him more as a result of him charging us interest. Why couldn't he just be patient? Eh? Charging us interest here. This is also going to increase what? Our creditors control. So we're going to credit this amount, okay? We have interest expense already there. Okay, that's fine. So interest expense So we said 720 plus the already balance that we have there, which is 480. Again, we will deal with these just in case there are any other transactions. We'll deal with them at the end. Okay, so that has been dealt with. Yes, it has been dealt with. Okay, cool, no problem. Then we move on to the next one. 3.7. 3.7, there they say H more timer is also a debtor and shows a credit balance. Okay, a credit balance of 800 in the debtor's ledger. Management has decided to transfer this amount to her account in the creditor's ledger. No entry has been made. Okay, so what do we have here? We have a situation where a debtor is also a creditor. So here they're saying shows a credit balance of 800 in the debtor's control. All right. So if there's a credit balance in the debtor's control, the debtor's ledger, we want to get rid of that. We have to do a debit in the debtor's control. That means it's going to be a credit in the creditor's control. Okay. So here we're going to merely say debtor's control. Okay. And that is 800 Rand. Remember they said no entry has been made. Okay, I doubt we'll have another one for that specific person as well. So I think we can plug that one in right now. Okay. Right. And so if we are crediting that amount here, that means it's going to increase what? The amount owed. So we're going to say plus. Alrighty. Then we ask ourselves, what other transaction do we have? One more. It says a check received from a debtor was returned by the bank, marked RD. The entry was recorded correctly in the subsidiary ledger, okay, but instead of debiting debtor's control in the cash book payment, the debit was erroneously passed against the creditor's control and posted as such in the general ledger. Okay, so I think here they should have said was correctly recorded in the subsidiary journals. In fact, no, forget I said that. But instead of debiting debtor's control in the cash book payments, the debit was erroneously passed to the creditor's control. The issue I have here is that there is no debtor's control in the cash book payments. We're never paying our debtors. Our debtors are paying us because they owe us. So we wouldn't have a debtor's control column in the cash book payments. So I don't know who wrote this book, but hey, they were smoking something strong. Oh well, let's proceed. Okay, so the problem here is that RD check should not be there. It's not supposed to be there. Okay, this is only something that happens in the debtor's control. So all that they're basically communicating to us, if you look there in the creditor's control in your textbook, there where we have bank and then we have RD and then we have 3,600. What they're telling us is we just need to cancel that. It's not supposed to be there. which is correct. We just need to cancel that. Okay. You'll never get a return to draw check that affects the creditors control. Okay. Right. So now what must we do? Okay. So it means that we've made all the necessary amendments. Okay. We've made the necessary. So now we can quickly just calculate what then our new balance should be, what our new debtors list should look like. So let's quickly, okay, so 4,000 plus 22,000, that will obviously give us 26. Don't need to get a whole calculator for that one. 26, oops, I'm saying 25, 26, 320. Okay, then here we are going to need it. Okay, so here we're saying 18,000 plus 66 plus 720 gives us what? 25,320. 25,320. Okay. Next one. We are saying 27,000 plus, okay, actually minus 90, and then minus 1180. So you get 25,730. 25. 730. Okay, then we have to add all these amounts together. So plus 26, just to verify, plus 25, plus 28. Whoa, what's going on? Oh, I left this amount in there.
Sir, can I interrupt? For each more timer, you calculated it wrong.
All right. I was adding, right?
No, you actually calculated as Zondo's thingies for each more timer.
Oh, okay. So here it should be 25, 730, right? Let's see, because I calculated that now. Yes. Okay, 730. So that looks right. So let's now calculate this each timers. What should be here? So 19 minus 66. Okay, and then plus 800. So 13,200. Let's see, are we doing it right now? Okay. Right, awesome stuff. So I'm looking at the answer book here, and it looks like that is correct. Okay, so I'm not going to waste any more time adding this all up. It definitely should add up now. Definitely should add up now. Okay. Thank you so much for that. Appreciate it. So again, we find ourselves in the same position, but do we want to? Okay, we know this should be our balance brought down and our balance carried down, so it's okay. Let's at least enter that much. Okay, so what is that? 90,570. 90,000. 90,570. Okay, it's going to be here as well. Okay, happiness. Right. Then, before we work our way backwards to get our new balance, whatever it should be, let's fill out the stuff we needed to do. So here, let's quickly see. Let's see, what is our interest expense supposed to be? So 480 plus 720 gives us 1.2. Okay, happiness there. Then here, what is our sundry purchases supposed to be? So 26,000 plus 4,320 minus 1,200. Do we get? $29. 120. 29, 120. Okay. Now let's see. Okay, this side we also had a calculation that we needed to do. Let's quickly do that and then put together the missing pieces. 5, 6 plus 90. We could have actually done that in our heads. Okay, so yeah. So 5, 6, 90. Done. Okay. Got that out the way. Now we need to say, okay, what are the things we left out in the creditors control? We had bank. All right, this was us paying them. Okay, so let me shift this for now. Okay, or I can do this. You see that settlement discount granted, that 500 Rand on the credit side. Settlement discount received, sorry. All right, that we actually should be putting this side here. So actually I'm going to put this at 9 because it's a long one. Settlement discount received. Okay. Let's see if I can align it. Oh, nicely. Okay. Then that was for 500. Cool, no problem. Perfect. Then we have bank, which was okay, maybe this we can give it a little more oomph or size. And this is obviously the cash payments journal or cash book payments, same thing. Okay, and that was the 48,000. Okay.
Sir, sorry for interrupting. For the creditors list total, I got a different amount.
Oh, really?
Yeah.
When you're adding up our figures or when you're adding up Were your figures different from ours?
Oh, okay, I see my problem. Sorry.
Okay, no problem, no problem. Right, cool, awesome stuff. Right, so we were at the bank, we put that 48,000. Cool, that's done. What else is there? There's the trading inventory and VAT. General journal. Okay, so I haven't gotten any indication. This is probably coming from where? Okay, we haven't gotten any indication that this is wrong. So we can leave it like that. General journal. Just trying to think what that could be potentially. But cool. Because we already have the sundry returns. Okay, that's okay. 220. Did we have this amount somewhere in there? Let's see. No, we didn't. Okay, it's fine. Okay, this is coming from the general journal. Sorry, trading inventory. And that. Okay, is there any amount that I'm missing? No, I don't think so. Okay, so again, we look to see which side is bigger. We've got 29,000 here, 1,280, 800 here. Okay, but here we have 48,000. 48,000, we have 500, and we have, so this actually looks bigger if we just look at these these amounts without looking at anything. But then we have to go here and say to ourselves, okay, these balances that we have, okay, do they show us as owing these guys? Because if we have a debit balance in the creditor's control, what we're in essence saying, all right, a credit balance brought down. In essence, what we're saying is our creditors owe us. Because remember, I'm going to just quickly draw this for you guys. We did say, and we've been saying this for the last 2 days actually, that your creditors increase on the credit side and decrease on the debit side. Okay, so if we're saying, okay, cool, then our balance brought down is actually on the debit. We're saying our creditors actually owe us, right? And we don't owe them. But if we look here, what do we see? We have a positive balance of 90,570. Okay, so obviously that means that we still owe our creditors 90,000. Okay, so that's going to be your balance carried down as well as your balance brought down. Happiness over there. Okay, we then say, what is the difference? Remember, now we're working our way back to find out the total we should have here. In fact, we don't need to work our way back to get the total over here. We just add all these to get the total that we should have here. Okay, so let's get our calculator, see what's happening. So 5,690 plus 500 plus 48,000 plus 220 plus this 90. Oh, goodness me. Now we have to start again. 5,690 plus 500 plus 48,000 plus 220 and then plus 9,570. Okay, 144,900 180. Wait, I'm still doing coloring here. Okay, 144, 980, if I'm not mistaken. Let's see. Yes. Okay, so can enter that here as well. 44, 980. Cool. Now we can work our way back to say what then was our opening balance. What was the correct opening balance? So this 144, we're saying minus 800 minus 1,200 minus 29,120. Okay, and it's 113,860. So let me increase the font here. Said 113. How much? 860. Okay, let me just increase that there. Let's try 15. That looks better. Right. And that, ladies and gentlemen, is your 2.7 in my textbook, and I believe 2.9 in yours. 2.9 in yours. So you can see it's exactly the same as the previous question we did. We were just focusing this time on the creditors. Don't know if I missed anything there in the chats. Doesn't appear to be so. But yeah, that's all that I wanted to do with you today. There's only one other thing I wanted us to do today. So it's a very good Friday. It's a very good Friday for everyone involved. And it's exercise 2.8 in my textbook. So maybe it's 2.10 in yours. Teacher needs to get a new textbook, an up-to-date textbook. So we are aligned. Okay. So let me close this. We're just going to discuss this, so we'll be done just now. And guys, if you have any questions, please, on anything, I can go back to it. Please feel free to ask. Okay. Because this is the last time, as I told you yesterday, we're done with Unit 2. Next time you see me, which is next week, Friday, I think, or Thursday, we are going to now delve into Unit 3, which I believe is depreciation. So yeah, it's getting real, guys. It's getting real. The show begins next week. So far, I think, yeah, things haven't been too tough. I think it's been decent. But now, with depreciation. But anyway, let me not scare you. Let me not scare you. Come now, come now. It's okay. It's just accounting. It's just accounting. So with 2.8, what is going on over there? Under the required, it says explain the concept of set-offs and illustrate the accounting entries by virtue of practical example, of a practical example. Okay, so set-offs, I think we've already seen them in the exercises we've done. We've also seen them in accounting 1A, again in the in unit 7, we've seen them there, and I think somewhere else, I just can't remember which unit we were actually doing such things. But here it says up top, sometimes it is possible for a business to have a debtor to which it is a debtor in their own capacity. All right. In this scenario, again, they're just using some fancy English here, but all they're saying is you can have a debtor who is also a creditor. Okay. And I think the last time when we touched on this topic, I used this very same illustration for you guys. So this is really just a recap. Okay. It goes on to say, in this scenario, it is permissible to set off your debtor's account against the amount that you owe the business in your creditor's ledger, or vice versa. Okay. So here we're just saying, okay, I owe you, you owe me instead of us paying each other, let's just cancel what we owe each other, depending on who owes who more or who owes who less. Okay, so here we have Peter Pan. Peter Pan is a debtor. Peter Pan owes us, if you see here, the balance is 1,000. Okay, cool. Right, but Peter Pan is also a creditor. So we also owe Mr. Peter Pan. Okay, now we owe Mr. Peter Pan how much? Let's see here. According to the books, 850. Okay, so we owe him less than what he owes us. Cool. So let's see now what can happen. So then in the debtors control, so this should be somewhere in the center, somewhere over there. Okay, we owe oh, I already spoke on that. So we're saying, okay, Mr. Peter Pan, you owe us 1,000, we owe you 850. Man, let's just make this easier on both of us. Okay, we're going to write off what we owe you, that being the 850. Okay, trying to space this out so it looks neater, but okay, maybe it's whatever. So yeah, in the debtors control, or the individual debtor actually, Peter Pan's account, we're saying, okay, the balance that you owe is 1,000. Okay, but we also owe you, so we're going to reduce that. Can you see we've credited his account by 850? Then we're saying, okay, the balance of what you now owe is 150. Okay, so this balance put down, I don't know what it's doing up there. It's supposed to be down here. Okay, whoa. Oh, no, that's not what I wanted to do. Okay, cut. Okay, there we go. Oh, man. Okay, there we go. All right, cool. Right, so the balance of what you owe us is then 150. Just pay us 150 and it's done. You don't owe us anymore, we don't owe you. Right, then in his creditor account, see what we are doing here. We also need to, okay, oops, let's just undo that. Okay, I want to put that in the center. Okay, fine, that's fine. In his creditors account, remember where the creditors account, we are owing him. We said, okay, we owe you 850. Okay, but we've written off all of this because you owe us more. Okay, can you see we can only write off or set off how much we actually owed him. Okay, which is then the 850. Okay, all right, and that's done. Okay, so that's all they wanted, just to illustrate the setting off process. But again, sorry, excuse me, but again, we've done quite a few of these. Okay, so this was really just revision. Yeah, I know I did this very same exercise with you guys in 1A in unit 7. But guys, I like the exercises we did today just because it shows you the different ways that they can ask the same question. Throughout the unit, it's just reconciliation of our debtors list to our debtors control, or creditors control to our creditors list. That's all you're doing. All right. So do the other exercises as well in your textbook, because you never know how they might ask you guys these questions. But that said, that is it from my side in terms of learning unit 2. Okay, so, and we only have 7 learning units, so yeah, if you haven't started, guys, the train has left the train station. Let's put in our shift. Like I said, accounting 1B is a lot more detailed, and I think maybe you might be already picking up some of that now. So if you're not on top of your game, before you know it, you will be left behind. Not because you don't understand or you're not capable, just because you underestimated it, or you just didn't put in the time when you should have. But that said, I know you're all capable, and we will get through this module. Right. That said, I'm done from my side. Don't know if anybody has any questions.